I want to get into this idea of investment advice, how we thought about investment advice traditionally. Has that changed over time? And if it has, what are the implications to you as an investor in terms of achieving financial success? What I want to do is put these ideas into the context of a real investor. And so here is my mom and dad. My dad is now 79. My mom just turned 75. And my dad and mom, they've been retired about 17, 18 years now. It's just, I think they're a reflection of the average investor out there. Everybody's looking for something, and unfortunately not everyone knows what that right solution is. This is the portfolio that they've had. Now, if you scan this thing, you'll notice it's actually just a listing of index funds. So that green line is a 50-50, so half stock, half bond portfolio. And we are comparing it to an all-stock portfolio as defined by the S&P 500. What you hear from the media in Wall Street, it's always the S&P 500. And so a lot of investors out there think that that's what the market is the S&P 500. Now, it's not. It's not the best barometer of what an overall market is doing from an investment perspective, but it's what's in their mind. So I'd like to just contrast a long-term perspective investment journey compared to what people think about the S&P 500. So in 2009, at the end of the decade, people were saying it was a lost decade, that you invested in equities for 10 years and you had a negative return. And what they used to define that idea of a lost decade was the S&P 500. So in 2000, the S&P lost 9%, followed by minus 12%, followed by minus 22%, which in 2002 was one of the worst years we've had in the S&P for about 30 years. Here's my mom and dad. You can see that they're just kind of cruising along. Their portfolio stayed relatively flat here. So it's kind of interesting when you look at this chart, you can see how different a globally diversified portfolio can look relative to what a lot of people kind of put as their mental benchmark as the market is the S&P 500. The S&P loses 50%. There's a massive loss of confidence and trust on Wall Street. We have a massive credit crisis going on here. Here's my mom and dad, and they're right in it just like everybody else. And it was February of 2009. I was having a conversation with my mom and dad, and then my mom comes on and says, "Hey, we're thinking about selling the Palm Springs house." And I said, "Well, what's changed to put you in that situation?" And she goes, "I'll tell you what's changed." She goes, "We just lost half our money. Okay? 50% of our wealth is gone." So that's what's fresh on my mom's mind is, will we have enough? She still had in her mind that half her money was gone. The value of the advisor and having those conversations is to say, you know what, don't forget about this part of the portfolio. It's doing just fine. You can have a much more fulfilling life and enjoy the moment you're in, as opposed to being stressed about what it might mean for your financial situation. You know, my mom and dad had a great relationship with their advisor. They understood what markets do. Markets go up, markets go down. And they got with their advisor. They kept the house. And they ended up, as I mentioned, sticking with their investment program. If you couple the role of the advisor with an investment solution that's designed, to be cost-effective, well-diversified, very thoughtful in its design and implementation, an investor can have the investment experience they deserve to have.